This is Satya Pradhuman. The latest issue of the Industry Outliers is just out, and it centers on housing. The title, Home Builders Buy the Dip. Given the sharp correction we've seen, the question is, should we be looking at housing? And if we take a look back at really some of the demographic trends, really the decade post the Great Recession, the underbuilding that took place, I think these forces are driving this recent surge in the demand for housing. They're secular and really not necessarily short-term in nature. That said, the stocks have run up quite sharply this year, well over 50% until just a few weeks back. And so when we look at some of the fundamentals, there's real reason here to consider this group for a longer-term holding. If you look at a couple of things that we want to focus on here is the margins, which is really the blue shaded area, versus home builder credit. What you'll notice is credit spreads are reaching historically low levels. So there's something the folks closest to the lending side of the housing business are causing them to act bullish. So when those spreads are narrow, that's a very good cost of funding. What's important though is that as these spreads rally in, we tend to see margin expansion. So as much as we've seen this rally, return to lower rate spreads surface in the last few months, the reality is that really this is the post-Fed tightening cycle that's underway. So to some degree, we think the margins that we're seeing right now is likely to be quite sustainable, even though mortgage rates are structurally high. This chart is important because it shows a couple of things. The purple curve represents the Case-Shiller index on pricing, which shows that naturally it's picked up a year and a half after the Fed began to tighten. At the same time, though, the housing inventory data is quite lean. And so it's these forces that are acting that's allowing housing to continue to run, even though mortgage rates are probably over 7.5 as we record this. Importantly, when we look at some of the industry ranks, when we look at fundamentals in terms of prices, top line growth, valuations, when we rank order these industries, a few of the housing related groups turn out to be quite attractive. So in terms of the consumer space, these are some of the more attractive areas for exposures to the consumer segment. Take a look at the report. Look forward to taking your questions. Thank you.